woes, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. This Monday afternoon, I'm Juliette Sarli. Great to have your company as we round out the first trading day of the week, and quite an interesting one given we didn't have a lead-in from Wall Street. It was closed on Friday for Juneteenth. But then, of course, we had all this seesaw action of the peace deal. Is it on? Is it off? So let's have a look at where the CBO 200 is finishing the session. Pretty flat there on the CBO 200, while the S&P ASX 200, which started the day in negative territory, then was higher at one point, also looks like it's going to close just slightly lower. It's down 7 points as we head into match off. 8,821 points. Very much choppy trade though, with investors welcoming somewhat signs of diplomatic progress between the US and Iran, but very mixed messaging over the weekend. And of course, President Trump once again threatening strikes if Hezbollah keeps attacking Israel. Iranian media on the weekend claiming that the regime had again shut the Strait of Hormuz in retaliation. So let's get to the themes of the day, and of course these Trump threats coming through. Mark Gardner from MPC put it really well this morning that maybe the president just needs to stay away from social media because his comments seem to inflame the situation. And of course we're also hearing that the main question here is whether the parties, not whether or not they can meet, but whether they can keep the process from unravelling under this political pressure. Then WiseTech woes. We woke up again to Richard White being on the front page or the front section of the AFR online amid this news that he is being investigated by the AFP over human trafficking. We spoke about it on the stock of the day today, and my panel was just essentially saying he needs to go. The board needs to do a complete overhaul there. And then Monday blues as we started the day. A bit flat here, gains in financials and consumer stocks, offsetting weakness though in mining and tech players. Let's get into the sectors of the day and see how they fared. And the miners mostly lower, BHP continuing to come off those records that it reached last week. It's at $60.70. Fortescue also weaker, while South 32 had a good day. Having a look at what we saw in the energy stocks, mostly weaker as we continue to monitor the uncertainty in the Middle East. Karoon down by more than 3%. And then the tech stocks as well lower, with WiseTech leading the pack there. And this is amid reports that Richard White is being investigated by the AFP in this human trafficking investigation, kicking off, of course, our key corporate stories. Metcash, meanwhile, saying net profit fell slightly for the 2026 financial year. The grocery distributor saying net profit was down 1.5% due to weaker conditions in its hardware and liquor divisions. Also talked about this on the call. Are you a Metcash IGA person? Are you Coles? Are you Woolies? Or are you, like Zachary as his wife and me, an Aldi person? Stay away from that middle aisle. Shares in Inghams dropping. The detection of a strain of bird flu in Esperance in WA. Inghams locking down the whole of its WA farms as a biosecurity measure, so we could have a bit of trouble trying to get a chook in coming weeks. The Inghams share price down by about 5%. A2 Milk had a good day. It was up about 7% at one point. Had a good day in New Zealand as well. Been given the green light from China regulators for an infant milk formula product rebrand, and STH shares higher. It will buy back up to $500 million of its shares over the next 12 months. Let's welcome to the COB Josh Barker from Barker Wealth. Good to see you, Josh.
Good to be here.
So, I mean, what was your take of today? We've got at these, are they on again? Peace deal headlines. It's kind of hard to keep up with.
Yeah, a little bit of a muted session with the lack of lead from Wall Street. But I think the market is trying to price in what's happening with oil. Oil's trying to price in what's going on. It's really, sort of a point where it seems as if things have been sorted out, but the market's still nervous about it. So I think that I do think that it'll sort itself out from here. It's obviously as close to it as it's ever been, and it seems like the market has largely taken it in its stride, particularly the US market anyway. So I think we'll get a little bit more news and reaction from Wall Street over the next night and following that. But locally, we've got some really big data coming up, which I think is probably more impactful than what's going on with global tensions.
The inflation data, but of course that all weighs through with the inflation shock from the war. So what are we expecting?
Yeah, so well, first up, we have inflation on the Wednesday, which it's been interesting. It's been coming in at high numbers, but it's actually been under the market expectations because maybe the expectations have been really quite bad. But it's still a high figure, I think, is the concern. And then Thursday, we also have the unemployment data coming out, which it's been doing a lot over the last couple of months. And they're two really important trends, obviously inflation and unemployment is really important, but it's been so low and stayed flat on those low levels for so long that the market hasn't had to worry about it too much. We're starting to see a shift in that. It's gone from 4.1 to 4.5 in the last couple of months, and that's actually above what expectations have been. So, both those numbers being higher are definitely negative for the market. The unemployment sort of has that counterbalance where if we do get higher inflation but also higher unemployment, they might start to argue that they can bring down rates, but again, I think inflation's more important to that. So they're not going to be able to bring down rates until inflation's under control. We had a pause last week, but I wouldn't view that as the change in direction by any means. I'd very much view that as a pause with the potential for there to be another rate rise. And what happens after that is still uncertain. But I guess the good thing about if inflation does start to tick up and we have the unemployment levels, something that they can work with. The cash rate's pretty high at the moment, so it's got some wiggle room to come down, of course, as everyone's I'm sure hoping for. But yeah, it's really interesting at the moment. I think that these economic themes and actual raw numbers and the change of the trend in these two numbers, I think in particular, will be more important than potentially what's happening overseas.
Indeed. All right, let's get stock specific though. I mean, this WiseTech news is, interesting. As I said on the call, the panel was basically like, you've got to wipe the slate clean, you've got to get rid of Richard White. Maybe easier said than done for a founder, but what's your view on the stock?
Yeah, well, it's one that obviously great technology and stuff, and it's just had this cloud over it. But we saw a lot of the tech stocks down today just because of that, which really has no weighting because the tech stocks have been beaten up as well. You have names like Xero sort of down 40-50%. That's obviously off again today because of that news. So just there's good value there, but it's just about sort of being in it at the right times. There's a few I'd say technology similar companies like your Polynovo. Healthcare has also been beaten up. There's actually a lot of pockets of the market that have really been sort of discounted. We saw Temple & Webster today technically go through its removal from the ASX 200, and that's down 70% over the last year.
Which one replaced that again?
I forget the actual name.
Yeah.
Sorry, but
I was putting you on the spot there. I forget too.
So that was removed, and we have about all of those discretionary stocks up down about 70-80%.
Yeah.
To the point where Accent Group's fighting off a bidder from overseas because it's that cheap. So yeah, there's been a lot of the area of the market that's really been beat up, and I think it's really just the materials that are keeping us afloat, particularly on that weaker economic outlook. So,
do you think then, BHP's taken a bit of a pause from its peaks, if you will, but is that likely to continue, or do we see those records breached again?
Well, I was having a look at the copper price, which is what it seems to be reacting more off these days, and looks quite strong. It's at a 30% up for the year, 50% up for the 5-year period, and all-time highs. And it just seems like with all the spending that's coming through on these data centers and these massive companies, particularly in the US, building those data centers, whether they're out of space or not, it's going to be one of those things that's just really used for everything. So I think copper goes higher in the next, over the, say, 5-year period. And I think BHP probably tracks more in line with that as well.
All right, let's talk about Metcash because it didn't have a great day. And are you a Coles, a Woolies, an IGA, an Aldi fan, or you just go where the bargain is?
Well, switched recently to be on your train with the Aldis.
Yeah,
so
Aldi's
it's
great. Available for sponsorship, Aldi.
Yeah, maybe everyone's sort of feeling the pressures, and to be fair, just getting fed up with the quality versus cost control that comes from Coles and Woolies. But look, can't say huge exposure to Metcash and IGA personally, or the stock. But it's one of those ones that, we're seeing this across the board right now with the inflation numbers coming through. Not every business can pass that on so quickly. So it's those ones, and we saw this, when we had inflation last time for a long period of time, and this has probably been a shorter period of time and will be a shorter period of time. But, we've seen companies that can't pass on their costs really come under pressure at these times. And unfortunately, something like a supermarket where the margins are usually around 4 to 6% at best. Any squeeze there, shipping costs, everything like that, trucking costs to get it in, always makes things a little bit difficult, and probably going to happen in the next report, I'd say, as well.
All right, an Aldi person as well. Josh, good to chat. Thanks for coming
Good to be
in.
here. Thanks.
Josh Barker there from Barker Wealth. Well, we had WiseTech, of course, as the stock of the day on the call, and I spoke to our expert Zach Riaz from Banyan Tree Investment, Jonathan Tekadina from MPC Markets.
The company fundamentals are still, it's still a solidly run company. Unfortunately, when I opened up the AFR this morning and I saw his photo on there, I'm like, oh no, he's at it again. And I was just like, here we go. So basically, for me, he needs to go. Simple as that. And there's plenty of companies that, once the founder leaves, they go on to greater and better things, and that's what the board has to do now. And they have to get him out of there, get out of the headlines, and get back to business.
I think the best outcome for existing investors is private equity comes and takes this out. I mean, they're already getting rid of a third of their workforce. That's a private equity playbook, and take it private, or this founder really needs to abdicate his position. It's an absolute shambles. At best, this is a neutral. We have a small holding in it. It's a small holding in the hope that, honestly, that someone takes this private, because the governance issues are just too extensive, to be honest.
All right, well, a flat day on the market, but let's try and find some winners out there, shall we? And kick it off with the leaders. Minerals 260 had a good day, up 10%. Kingsgate consolidated, 4D Medical, or Abandoned Mining, and Predictive Discovery. I don't really know too many reasons or headlines behind any of those moves, but that's what the leaders look like, rather. Let's have a look at the laggards, and of course WiseTech is the loser. They're down some 17%, I think a 5-year low, $30.64. As the panel said, though, if you believe in the story long term, maybe it's potentially a look at those levels. Tuas though, PLS, Elvira, lithium, so quite a bit of a weakness in lithium story coming through there. Liontown was down by about 5% as well. Let's have a look at the small end of town, and Vitrify Life Science had a good session, up by more than 12%. Horizon Gold there as well, while the laggards in the small end of town include Hum. Of course, that takeover rebuttal happening there with Hum, with its bidder walking away. Credit Corp rising after abandoning its pursuit of Hum after due diligence and slashing its offer. The two companies unable there to reach an agreement. Let's have a look at what is happening tonight as Wall Street reopens, and we've also got EU consumer confidence, which is tipped to remain in the negative there, and we also get chipmaker Micron's earnings. Well, that's later in the week, but they're going to be closely watched as a barometer for this AI demand momentum. The day ahead, locally, we have the manufacturing flash and services PMI data coming through, and Japan's flash manufacturing PMI too. Let's recap where the CBO 200 has finished the day's trade, going nowhere, very flat there on the CBO 200, while the S&P ASX 200 has also had a bit of a wobbly day's trade, but it's closed a bit lower, down 0.1% or 13 points to 8,816 points. WiseTech and Tuas there, the biggest losers, and the index down 1.1% over the last 5 days. Join us bright and early from 9:45 a.m. Eastern tomorrow. We'll see you then.